everyone. My name is Mark. I am from Blunhouse Technical Analysis, and welcome to another edition of Chart the Markets. We're starting a little bit later today. I apologize for that. It's about a couple minutes after 2 o'clock. And what we are looking at now, because we got to get right into this, is a daily chart of Bitcoin. Let's save all the housekeeping for later. This is a daily chart of Bitcoin. And for those of you that have been here for a while, you know how we look at price on a chart. We base our methodology off of Fibonacci's, fractals, and filters, with the understanding that, current price looks for past. In the event of a breakout or a breakdown, price is going to look for where it's been before because that's where it's comfortable. And we can use those areas for targets, which is essentially, what we're doing. And the reason I'm showing this Bitcoin chart is just to help validate what we've been telling you time and time and time again. So this chart goes up to, I guess, last week, around 27th, 28th of October. We dropped this level on here at 100,946.50. You can go back in the streams and we talk about it extensively. Why did we drop this level here? We were simply trying to identify where price has been before, just averaging some tops, some bottoms, support, resistance from days gone by. And this level here, we also dropped last week or the week before. And here we are. We came back to this level. And when we put this down here, price was somewhere around up here. And here we are. Why? Because price has been there before. So when you're trying to figure out what the heck is going on when price is whipping all over the place, look at your chart. The answers are on the chart. They're not in an X space, as fun as they may be. They're on your chart. And when you look at the right side of your chart, does this not look like a breakdown? Unlike this, which looked like a breakout? Of course. So we know we're breaking down. Here's our sell signal way up here from that Black Friday. Did the trend change all through here? No, for weeks it stayed. A little bit of a reprieve. This is a failed breakout, right? Roll over, take out the previous wave's low, and that's what we've done. Here we are. Why? Why did we go here? Not just did we hit it, but, we hung out here for 3 days, 4 days. It's because price has been there before and it is likely to go there again. And the only thing that changes that, in this case, would be an influx of money to break the trend. It's as simple or as complicated as that. Now, we can talk all day long about why price has fallen the way it has, but it's not going to do us any good. Because our job is not to talk about a chart or a ticker. The job is to monetize the chart. That's it. There you look at it on a weekly. You can see this level in here was pretty clear. Same with down here. But let's add some context to this. Because it's one thing just to look, for ups and downs. Fine, I get it. So let's add some context. 20, 50, 200. Just for simplicity's sake. When you break a level, you're going to find the next level. Break one level, find the next. Break one level, find the next. Look where this big giant dagger closed, right at the 50. Did you break the 20? Yes. Did you find the 50? Yes. Did you eventually break it? Yes. Did you find the 200? Yes. The first attempts typically fail. Here's a great example. Yes. Another failure of the 50. This is the first attempt. Fails. Is this the first attempt of the 20 since it was broken here? Yes. And so on and so on. Lower lows, lower highs, that's a bear trend. But, you know, where does price go? What did we talk about last week? Look for the 500 MA. Go back and watch Tuesdays and Thursdays streams. Right? Why was this a very likely target? Because sitting down here as well was the 500 MA, which is also a draw for price, because when you break one level, you find the next. And what else is hanging around down here? Let's just look. There's the 1000 MA. Now, you guys know I use these long-term averages and the shorter-term ones, and I use them on all time frames because everything is fractal, and this helps frame in a range based on where price has been. So what we know is that if we don't hold this level here, we start hunting for the next level down. And that can come in the form of a major moving average. It could come in the form of a bench of past price. Oh, this looks fun. Let's just take a look here. Can we average? Let's just drop. There's another level. And I'm sure lots of people are doing this kind of work. So let's take a look at the weekly. Yeah, okay. The problem for this Bitcoin chart is that you're trading, if you notice your volume profile to the right-hand side has got all thin. It's thin and it's gray. So that's light trading, like very light trading. There's not a lot of volume up here. And what does that mean? That means on the way back when you come to test it, there's nothing there to hold it up. Right? So just imagine that you're trying to hold up a foundation with pillars of fairy dust and air. They're not going to hold up. And chances are when they collapse, they'll collapse quickly. And that's what happens in these gaps, like you see here. And that's what happens particularly violently when you get into that light trading. So if we break, you know, I added the 100 MA on here, and this is 100 MA weekly. Breaking one level, are we looking for the next level down, which could be the 100 MA, or maybe it comes in the form of, you know, some sort of area where we can average some price. Let's just, for interest's sake, let's take the ones at the 50. You know, there's a whole bunch of places where you could drop this level. In here, same effect, you know, so, but we're majoring in minors. I think you know what the target is. You break one level, you find the next. You break one level, you find the next. All of this looks more likely all the time because you're in light trading. So you don't even have to have sell pressure now. Pull this down. Just backing off the gas pedal is enough to do it. Because what you see here is constant influx of new money. That's what drove it up like this. And that's what drove out all our ranges and fanned them out like we talk about every week. So the spooky thing on this weekly chart, and you're going to look at lots of charts right now on a weekly time frame, where the 200 MA, for example, which is our basic bull-bear indicator, looks like it's miles and miles south of where price is. There's a lot of charts like that, not just in crypto, but in stocks. They're everywhere. Just take a look. And the spooky kind of unnerving thing is that we can't ignore the fact that price will come back to the 200 MA. It's not irrational. It's a very much expected phenomenon. So if that's the case, then there's probably considerable more downside that's possible. this bench in here, this area in here, I hate to say it, but there's a lot of money there. If new money doesn't come in and price continues to collapse, it will continue to look for areas where it's been before, benches of past price. But when there's nothing to hold things up, it makes that 200, as spooky as it feels, but it makes it very much in play. So let's hope you hold somewhere in here. And although this isn't necessarily comforting to look at levels that low, at least you can understand what's going on, right? So if price continues to fade, where am I going next? And when you get there, it won't be a surprise. And if it doesn't hold, where's it going next? And when it gets there, it also won't be a surprise. The chart has all the answers that you're looking for. All of them. And when it doesn't give you the answer that you're looking for, then it obviously hasn't made up its mind. So are you expecting, because this is the first touch of this level, we can do this on small time frames, large time frames, it doesn't matter. Here's the 500 MA daily. This is the first touch since it broke out. So you would hope that it gets a little bit of support here. That's the hope. But we're not in the hope business, right? That's not what we do. The other way to look at this chart is, okay, so you got a little bit of support at the 500 MA, but the problem is this is one big impulse down hitting a major moving average. I would expect or like to see this candle really pop, but it's still unable to take the 5 EMA. So are we just going to do another impulse down, retracement higher, fade at resistance? Same kind of thing? I don't know. We're going to find out. You could also chatter here for a little bit, right? We have three choices, up, down, and sideways. So if we don't hold, you start looking south. If you bounce, well, what do you want to do? You want to have enough money come in to reverse the trend and give you this kind of a look that you see here from here. But we're a long way from figuring out whether that's actually happening or not. All right, so although the chart looks terrifying, and I can appreciate that you feel that way, just take a deep breath and kind of inhale, exhale. These pullbacks are not the end of the world. Right? We've seen these things before. Although you never like to see price go down when you're long, it happens, right? This thing went essentially parabolic, so the retrace is going to suck. That's just the reality. How much, how much you can hang on, or all of that is going to depend on when you got in and how thick your skin is and what your long-term plan will be. But that's really not why we're here. We're here to talk about how to read price on a chart. But this chart that's not unfamiliar to anyone who comes into this stream. What you're seeing here should not be a surprise. It just shouldn't. Okay? Let's take a look at ETH. This is the weekly chart for ETH. And the concerning thing about this chart is that the point of control on the volume profile, and that point of control is the most dense area of volume for the length of this, which I believe is like 200 candles or something. When the point of control is in the same range for both the daily and the weekly, knowing that the point of control is a draw for price, that's a little concerning. That suggests to me that perhaps there is still more downside to come. Knowing that price is drawn to the point of control in, that heavier past price, which it represents. If you're looking at this daily, you see this is all one big giant gap, with the shelf being quite obviously right at the POC. Not very often is it this dramatic looking, but in this case it is. And on this ETH chart, just so you think, oh, that never happens when you come back and tag all of the averages. Oh yeah? All right, you came back, you tagged the 20, the 50, the 100, the 200, the 500, and there's the 1,000. That's next. And for as unlikely as you might say that is, was it more or less unlikely up here? A lot less, but yet here we are. Because what didn't happen? Money never came in to change this trend. Simple. Like, it's as simple or as complicated as that. What changes that trend down? A little cleaner on the weekly. What changes that? Money coming in. And that hasn't happened yet. Where's that likely to happen? Maybe where price has been before. But look, this is still pretty heavy. There's still a lot of downside here yet. I think you come back to the 200. Just like you did here, just like you did here. Spent, a month and a half, 2 months in here at this level. Nice gap here, so if you fall into it, you'll make quick work of it and find yourself down at 25, 2600 all over again. And I know nobody wants to hear that, I understand. But we're not here to stroke egos and pat backs. We're just here to help you learn how to read price on a chart. Sometimes it ruffles people's feathers who are, not objective, and they get a little bent, but that's not our worry. Our worry is just to show you what happens when. Right? You go parabolic and you spread out your ranges. When you come back to check them, it is going to feel very dramatic. And let's face it, it is dramatic, right? That's a massive drop in price. But yet, here we are. But the whole time that was unfolding, at least you could say to yourself, I kind of know what's going on here. If we don't catch a bid, we're going to fall to the next level down. And here's where we might find it. So the other one of the parts of our methodology is using fibs to help validate what we see on the chart. So here's our weekly chart, and I just grabbed a swing low and swing high. I know there's a massive range here, but that's what it is. That's life in crypto, right? Where is 618? Right here, 2756. So we've broken through the 50% level. Nobody wants to say 2,500, but I'm sorry. It's just, there's too much down here. Point of control, the 200 MA. This gap that is really sketchy if you fall into it. So the fibs are kind of validating this same range. Again, it's not pin the tail on the donkey. It's just to get you in the right neighborhood, level by level. And again, I can't help but think that there's so much down here that's waiting to be touched that we don't continue to fall a little bit. And if you're thinking, well, that sucks, that now what do I do? Well, now you actually can develop a plan and how to monetize the chart in both directions, because that's really important. If you're trying to make make a living on long trades in a bear market, it's really tough to do. This Solana chart, and this is again the benefit of coming in twice a week because it gives you the opportunity to see how these things unfold over time. But we have watched this Solana chart bounce around, but ultimately it was trending down. Lower highs, lower lows. That's the definition of a downtrend. Right? It doesn't matter what you want price to do. You know, every big pullback doesn't necessarily mean it's the bottom. Right? You can't, you just can't buy. If you bought every dip here, would you be ahead or behind? Behind and out of capital. Right? So, it's the classic, oh, you don't buy till there's blood in the streets. Well, here you are catching falling knives, bloody as hell, look down and realize that all that blood is yours. Sometimes the best trades are the ones you don't make. And what I mean by that is you don't have to buy, for those of you that just won't sell short, you don't have to buy every green candle. Sometimes it's better just to stay away. If you don't feel safe walking around in a lightning storm, stay inside. But what we're trying to do here is give you a means to track price. And understanding that everything is fractal. So we're looking at a weekly chart. Do we still have a confirmed downtrend on a weekly chart? Yeah, we do. Have we been failing level by level? We have. Not totally convinced this is the bottom yet for this. And on the daily chart, yay, you get a green candle, but it hasn't broken trend yet. And that's what we look for. This move here, did it break trend? No. Did these two giant candles break trend? No. Because it takes a lot of money and a lot of momentum after that kind of sell-off to lift those levels back up again. And that's why these things take time. And I know it's frustrating. Oh, is the bottom in yet? Is the bottom in yet? Is the bottom in yet? I don't know. This is just a green candle in a downtrend right now. It hasn't broken trend or anything like that. Look to the weekly and it'll tell you over the longer term whether that's a setup or not. But if we look at this candle, so what do we have here? We have this big impulse down, right? Triggers our signal. This was obvious. Batman ears, right? Or an M, whatever you want to call it. That usually leads to one thing, which is this. But however you get to this sell-off, what concerns me about this candle is that it's showing us nothing on this weekly to challenge even the 5 EMA. It's not doing that. Now I know it's only Tuesday, so we've got several days to go. We can come back on Thursday, and of course this could be a different story. But as of now, we haven't shown anything to challenge the 5 EMA or the T-line. Maybe we'll get a couple weeks of this. Slide up, and then whoosh, roll over again. What we see on one time frame, we'll see on another. Just like we show it on a 15-minute chart, how price goes down, pulls up a little bit, then kind of fails at some resistance, starts to roll over. Well, now we know we've got a failed breakout in play, and you come back and take out the previous wave's low, that kind of stuff. That could be what we're dealing with. But time will tell. We don't know what comes after the candle we're currently working on. Right? Because all we can do is kind of use the tools we have to make any kind of a determination. Where are we going to see resistance on the Solana chart? Well, if you were to break through the T line, you'd have to challenge the 20 again, just like you did here. And is that where you find resistance and then roll over? We don't know. It's possible. But those are the kind of things we watch. And then, of course, dial your time frame backward. Let's go to the 4-hour Solana chart. Broken the 20 on this time frame, and you've kicked out a signal. The resistance is likely going to be where? And this is not a trick question, but a little bit of a trick question. Naturally, you think of the 50, right? This is the first touch of the 50 since it broke. So it's going to be attracted to that for sure. But it could break through and throw you a little bit of a curveball. And the reason that may happen or could happen is simply because you've got this big gap here with light, super light volume. So you got light volume, which we know price can rip through, and then you got these gaps, which magnifies that whole thing. So it is, and here's the shelf. That lines up perfectly with the 100 MA on the 4-hour. So you could test the 50, but you're in a gap, so you have the ability to move through it quick, and this might be where you find the resistance that you would anticipate down here. So yes, there's the 50. It's going to be a target. Always, always, always keep an eye on those gaps, on those volume gaps. Because, again, price can rip through them really quick. And knowing that they're there is helpful. Because I think, again, if you can take a knock at the 100 MA on the 4-hour, understand this is the lower value range even. So it too would kind of, I'd consider it somewhat of a target. If you fail the 50 here and roll over, you'll kind of see the setup on the daily as well. Let's take a look at XRP. Daily XRP. Do you remember we dropped this level in at 215.22? And we didn't do it, by the way, when price was all over it, right? We were doing it up here. It was after the Friday. Why did we drop a level in there? Simply because we were trying to connect a significant amount of past price, because we know that as we're trending down, as we break levels, we're looking for places where price has been before, where buyers and sellers have shaken hands, where they've sat down on a bench of past price. That's what we were looking for, and that's what we hit, right? And it's not an accident that we're double bottoming off this level. It's a level that you could anticipate that may happen because so much price activity has been around there before. Does it double bottom and pierce up? Who knows? But it's not an accident that price is averaging itself along there. In all of these, everything we're looking at is dynamic in the sense that, you know, time and price are actively moving around. You'll see the 50 crossing down through the 200. That's called a death cross. Most of you know that. It also appeared on Bitcoin. And the funny thing is that as price was just collapsing, I didn't hear anyone in our Telegram or anywhere else say the words death cross. And I don't put, you put some stake, but not a lot in it. There's some statistics that will demonstrate there's some relevance to it. You never want short-term averages crossing down your longer-term ones. But everyone was so fixated with the velocity of price dropping that no one even picked up the fact that there was a death cross. It's partially because you're so fixated on what price is doing at any given time. Don't long into resistance. Why? Well, this is why. Well, let me try it again because I didn't learn the first time. Well, okay. Let me try it the third time because I didn't learn it the two previous times. And this is where a lot of traders, especially new ones, get chopped. It's like, okay, I'm not gonna long this massive downtrend. Fine. I'm gonna long it at support. Great. But if you're not removing yourself from this, like, you got to be trading this, right? That's the literal definition. You're short, you're closed. You're long, you're closed. You're short, you're closed. I know you go into the trades that thinking that, but then once you open them, it's like some of you believe they're infinite and they can just go on forever. And that's not what we're doing. We're trading, right? But this is sketchy, and what happens if we fail it? Well, we've got more levels below us, so stay tuned. Oh, I know what you want to look at. Everybody wants to look at Aster. So I'm just going to drop the time frame down a little bit because there's not a lot of history here, and I want the volume profile up. So what was going on yesterday's daily chart was the resistance at the 50, right? If this fails, so you've got your first test, right? Failed. This is your second attempt, breaks through. Was there anything on this daily chart that was suggesting that perhaps that was going to happen? It was the divergence between the T line and the 5 EMA. Right? Right here. It wasn't, flat and diverged. It was actually arcing up and diverged. So, yeah, you want to wait for confirmation. You actually had an early signal here. This would have been painful because you went sideways for quite a while. But we were talking about this, that eventually this thing will break out. And it looks like this might be the candle. And I like the candles that break out at the 50, regardless of time frame. So this one has my attention as one that might be meaningful. Right now, to drop your time frame down a little bit again, just wait for the volume profile to load, if it does. There we go. Bullish chart, right? Nice move up, nice retracement. The move higher does what? Takes out the previous wave's high. Just like the failed breakouts, you take out the previous wave's low. This takes out the high. This here, so you have this impulse higher that creates a bit of a gap, right? You see all this air between the candles and the 5 EMA. This air, this little gap, usually gets filled. But just like we have this kind of impulse down sometimes, and then price goes sideways, comes back to the T line or the 5, and then the downtrend kind of continues. You have the same phenomenon to the upside. And this is often what it sets up like. You have that kind of impulse up, and then price goes sideways. It doesn't collapse. It just kind of hangs. And it's almost as though time and price are waiting to meet each other again, and you have the average in price connect, whether it's the T line or the 5 EMA, it's irrelevant, but it'll find a way to come back, and then boom, it hits it, and price moves higher. As long as this divergence is intact like this, that trend higher is still in play. And these are the things that help us determine whether or not we stay in trades or wash them or take profit at certain points. This chart still looks bullish, and on the daily, I don't think we're going to show anything else here, but let's look to the left for past price. So now we've broken the 100, and if we look to the left and kind of to the upside, this area in here would be a target, right? Somewhat structural. You can see there's some wicks here in the tops of these candles. Again, we're just creating a range. That would be an area that you may find some resistance. And the other side of that coin is if you were to break through, it gives you the opportunity to look for that structural work to the upside. And you can start to pick out some ranges. Any pullback, where does it bring you? Well, if we fail this level, so we break one average, we'll find the next average. We would simply come back to the 20. Nothing goes straight up. Nothing goes straight down, typically. So if this move, when it starts to retrace, would it be appropriate that it came back and at least touched the 20 at some point? Yeah, it would be. And that would also not be a disaster. We see all the time, nice move up, retracement, and then bounce and take out the highs, and the beat goes on. In order to move higher, you really do need to come back and refuel. Think of it like that. Let's look at Zcash, because who's not talking about Zcash? Did price go parabolic? Yeah, I think you could say that. This is the daily. What happens when you go parabolic? You fan out all of your ranges. We know that. And we also know that it's totally appropriate to come back and tag them. And obviously, the first one in order is the 20 MA. So here we are finding support at the 20 MA kind of a few times now. We have to, price has to hold it. If it doesn't hold it, you start looking to the next level down. But are we looking at a bullish chart? Let's take the candles off for those that might be looking on a device. I've taken the candles off because I want to show you that even though we've had, this big move up and some volatility to the downside, the trend on Zcash, the way I look at the chart, has not broken. Right? The price support that you found in and around the 200 has just led to a continuation and led to higher highs. So this is still a bullish chart. Yeah, you'll see a little red on that screen within your 5 EMA, where it shows you that some price has pulled back somewhat, but the trend is still intact because the divergence is still intact. And this is where you can find some calm in the chart. It's when we throw the candles on that we become completely manic, right? This was a chart that at one time we were talking, because everyone was saying, oh, it's a double top. Well, is it? This really just a continuation. That's all it was, right? You came back, price bounced, and you got a continuation to the upside. You're still trading above the T line. You're still trading above the 5 EMA. So this is still, again, a bullish chart. What's the risk to the downside? Because when you're looking at your charts, I don't want you to always be thinking of the upside opportunity, right? I want you to also think of the downside risk, right? The downside risk and upside opportunity the downside is equally important, if not more. So, if you're looking at this chart and you were long, you can't ignore the big gap to the right. You can't. Now, the upper value range, which is that thin blue line, this one in here, that upper value range is in line with the 20. So you're hoping that you get another one of those continuation moves like this. But if you were to break it, you've had a couple encounters with it already. It wouldn't be the first time it had seen it on a pullback. But if you were to break it, what are you vulnerable to? All of this stuff in here. That gap. And the 50. So knowing where the downside risk is, to me, is almost more valuable than having the upside opportunities, because if there was something to step in on the chart, I'd probably find it. And this volume profile has really helped me avoid those instances, especially like to the downside risk, especially. Right? It's because the downside, we always want to be in denial to it. But it really does help you see where the risk is, and the risk on this chart would be falling into that gap, which, let's be honest, hey, there's the 200 down here, so there's your point of control. So yeah, there's a lot of draw for price. Take the noise out of it. Look at that weekly. Now, does this weekly chart, because it's gone parabolic to this extent on this time frame, does it change how we interpret the chart? Does it change how we read it? Absolutely not. Absolutely not. Everything is fractal. Interpret the chart the same way I would a daily or a weekly or anything else. Look at where this wick went. Literally kissed the 5 EMA and then moved higher. Now, I interpret that as bullish, right? Probably didn't feel like that when this whole thing would have been one big red dagger, but to get support there is a key thing. This air that we talk about, that gap, well, in some respects, this wick came back and filled it. If this ends up being a top, right? If this candle closes somewhere down here and next week's candle opens in this neighborhood, and this is a top, well, then you can start to do fibs, in the other direction, to start to pick out on the weekly chart where those retracement levels might be. Just for fun. Yeah, let's take it down here. So on the weekly, if this was a top and this did start to roll over, and you failed the 5, failed the T line, and you don't hold the 50% fib retracement, you start looking to 618. Wow. Big pullback. Feels unlikely, but still. You have to know where these things are. You have to understand where the 20 is, at least in my world. On the daily, the weekly, and sometimes even the monthly, depending on what you're looking at. If it has a lot of price history, then absolutely. Everything is fractal. Right? Everything is fractal. Now, I know there are folks that want us to look at this Lily chart, which I promised to do. And does that look like a breakout to you? Kind of does to me as well. Not, an insignificant one either. This is the reason that I drop these trend lines on here, just for a visual representation of, hey, this is serious, right? This is real, right? And this was kind of making lower highs for a while. It's a weekly chart, so it's a considerable amount of time, but it sure is bullish now. Is it a little hot? Sure. See, it's created this little bit of it. You can see here the space. So does that come back and get filled somehow? Possibly. All right, the horse doesn't like to get too far away from the barn. And we're starting to get a little bit overbought. So you can start looking over the shoulder for the pullback. But this is still a very bullish chart. You could pull back to the T line or 5 EMA and still not break trend, I think, on this time frame anyways. You don't see that every day, right? Where it pops like that. Let's look at, I feel like I'm missing something here. Pirate chain. So the privacy coins, you know, they've had their 30 seconds of fame or whatever they call it, but this is another one that's really popped. But even with, you know, the price movement, still a bullish chart, really. It's got some vol to it, but still a bullish chart. You hope you get support in here, or else you could have a problem. Because if you break the 50 and you fall into this gap, there isn't a lot to hold you up. And these are the charts that we're going to see a lot of, right? Like here's one, not a lot of price history here, but look how far away the 20 is. Like you can almost cut this thing in half to get to the 20. So it's kind of spooky. Just another example of parabolic price movement, fanning out all these ranges and then coming back and checking them. Feels like the sky's falling, but they are just completely and totally appropriate levels to come back and check. What I don't like on this chart is I don't like the stochastic RSI dumping and rolling over like that. I don't like the Fisher, because the Fisher is the one that really tries to give us the cleanest signals it possibly can. It's using a Gaussian channel to filter out noise, fibs, fractals, and filters. And it's kind of rolling over here with some velocity. So, you know, again, suggesting downside. And the MACD, are the moving average and signal line above zero? Sure they are, but this is looking also a little bit heavy. And the MACD lags a little bit more than the other two, and that's why it's positioned third. Usually this is the order they go off in. Not all the time, but most times. Okay. Let's take a look at NVIDIA. Because this thing in the next couple days is going to be incredibly relevant to the market. Because it reports when? Tomorrow. After the bell. And let's face it, there's a lot of money in the Mag 7 or whatever they're calling them today. And when you have a lot of money in a very few amount of stocks, or a lot of money in one primary stock, and something goes sideways or the market gets disappointed, the rush to the exit can be fast and furious. It's literally like, you know, getting into Walmart on Black Friday, except the exit. People are getting trampled, right? It's a bit of a mess. And I know we look at this chart every week, but I hate these candles up here. I don't like them at all. And I just very, very nervous for the market, that if you fail this level in here, and let me just blow this up a bit. So you have, this is the 100 MA. I've got everything lit right now. You know, you literally wicked it today, almost to the penny, and bounced up a little bit, but we're not challenging the 50, never mind the 5 or the T line. So I don't interpret that as strength. There might be some apprehension in the market to take it higher or lower, this close to earnings, and I totally get that. And I don't like to trade around earnings for obvious reasons. But let's just look at our chart, and what's our chart telling us? So we had this ugly look up here in the big sell-off. And what never happened? We, even with this big snapback higher, never changed trend at all. And we rolled over hard. Broke the 50. Broke the ice. Remember we talked about the 50 being the ice? That's why it's ice blue. So ice hole failures are not fun. So we've broken the ice. Getting a little bit of love at the 100, and are we surprised that we're chattering a little bit at the point of control? That's what that thin red line is. You shouldn't be, because it's a comfortable place for price to be. It's been there before. This is the highest concentration of volume, is where that point of control is. So you shouldn't be surprised, right, that it's hanging out there. But make note that you haven't broken the 50, you haven't even tested it, and you haven't tested the 5 or the T line. And what would happen if this time you actually broke the 50 with meaning? Well, then you're rolling over into a gappy area. That's the point of control, and everything north and south of it, consider it to be gappy. Lower value range, 200-day moving average. Is it unheard of to reach the 200-day moving average on a daily chart? Has that ever happened before? Of course it has. But for those people that think shit only goes up, it doesn't. It just doesn't. And it will find this level again. I'm not saying it's going to be tomorrow or the day after tomorrow or next month. We just don't know. But the downside, if you were to interpret what you see on the chart, we know that's an average of price, and price likes to be where it's been before. So, okay, I get why it's there. But I understand that I'm failing levels, and now I failed the 50, and my snapback is not even a snap, never mind a back. So, if I bounce here, what's my upside? My upside is taking out previous waves highs and all this in this level here. We know that. We also know that the first attempt at the 20 will be a high probability of resistance or rejection. And if we fail it, the downside risk is pretty intense. How we validate, let's change time frames. Let's get on the weekly. What's happening on the weekly? We're getting essentially some first touch support from the 20. And we have not produced a sell signal yet, by the way. Right? So this isn't about, the opinion of where we want price to go. It's where the chart would likely lead it to, or where price may lead on the chart to go. So what we're seeing on the weekly is if we don't hold it, if you hold the 20, you could bounce and take out this previous wave's high, like we suggested on the daily. If you fail the 20 in this light trading, where this big gap is, do you think it would be difficult to find the 50? I don't think so. It's not going to happen in one candle particularly, but it would be an ebb and flow of, price moving in that direction. The downside risk on this weekly is pretty clear. Is it unheard of to come back to the 200 MA on a weekly chart? Of course not. It just feels and looks like that's insane. But that's I hate to say it, but that's the world we're literally living in. And we go in denial when price goes down. We only want to think of it in terms of when it goes up. But when it goes down, it's typically going to come down quickly. Let's look at Apple. Now, obviously, been in here before. We have some lines and levels. Bullish chart. Almost looks like the Lily chart, you know, that kind of went parabolic like that. But very bullish chart. Divergence on the weekly is still there. So that divergence is telling us that the trend still is higher. A little bit of a doji up here this week, but again, it's, you know, who knows where we're going to close. The downside risk is, because you have to understand you're in pure price exploration area now. The downside risk is what? That we come back and at least test the 20 MA at some point. Fail it, and there's your 50. This is, although you can't see because there's nothing above it that where price has been yet, but this is a gap. That's the shelf that lines up with the 50. And if possible, perhaps, if we go, I'm just going to switch charts for a second, and I want to show you something. So TrendSpider, I love TrendSpider. I love TradingView as well. They're both great platforms. And if you don't have a TradingView account, you probably should. And all of your exchange charts are going to look like a TradingView chart, so it's going to feel very familiar to you. One of the things I really like on TrendSpider, however, is the anchored VWAPs. And this pink line here is the anchored VWAP for volume. And this, I don't know if you can see this, but there's a darker blue line that starts here. And that is the anchored VWAP for price. Then you have the 50-day moving average. And of course the other anchored VWAP. And then this is your upper value range on your weekly volume profile. And the reason I point these out is because these will be draws for price. So in the event of a pullback, and this is why I love TrendSpider so much, is I sometimes will only have on my charts when I'm using TrendSpider are these anchored VWAPs, one for volume, one for price. And price tends to be attracted to those levels. That's why I've just put that little bubble on there to draw them out. Because I think if this rolls over and fails, I appreciate it's still bullish, but if it does roll over, it's going to look for the 20. And then if it doesn't hold it, all this down here will again be a draw for price. And this is essentially trading at a premium because this is your upper value range. So, the hope is that you roll over, go short, and that would be a target. But that's why I use these anchored VWAPs, because price is really drawn to them. And when they're together like this, that draws even stronger. Look at your stochastic RSI on this chart. Really, really hot. It's running at like 96. So overbought. And it can stay there for a long period of time. We know this, right? We understand that. This is your Fisher transform on TrendSpider, and it's starting to show you that it might be crossing over to the downside. So we'll see what happens here. But I just wanted to point out that these anchored VWAPs, and there we are on the daily. Right, that is volume, and down here, just under the 200 MA is price. 50 MA as well. So on the daily chart, if this fails, then this down here becomes my immediate target. And again, everything is fractal, so that's how we're kind of looking at these things. Here it is on the 4 hour. Here it sits on the 4-hour down here with the 200. So again, I feel that it might want to tag that. But we don't know until the next candle comes, or the one after that, or the one after that. But I just wanted to point out that the strength of those anchored VWAPs is really something. And again, so they would be sitting somewhere down in here on our chart. Now, let's take a look at our friend Tesla, because this thing is bouncing all over the place. And we're going to start with the weekly. And one of the reasons I'm using these weekly charts like this is because when you have price bouncing around all over the place intraday and on daily charts, they get really, really noisy. And it just looks like a mess. And one of the ways that you can take that noise out is to kind of expand your look and go to the weekly the next time frame up, right? A fractal look, but going forward. And this is Tesla's weekly chart. Now, we talk about this all the time. People can say, oh, that's a double top, that's a double top. It's certainly two equal points in price. And, you know, the thinking is that, man, if I didn't sell up here and then it sold off, when I got a second chance, a lot of people take it. So they'll sell that second top, which triggers the move down. But it's not really a double top technically until it breaks that center channel, which I guess we would consider this in this case. But we're nowhere near that. So right now what we're looking at is, yes, two equal points in price, somewhat of a retracement. Let's just kind of look at this one candle at a time. But we haven't, and here's our current candle. What you need to be aware of is that on the weekly, you could simply bounce here or get support at the 20, kind of like you did down here, I suppose. And instead of this being a double top where price sinks, it could be a situation where it bounces at the 20 and then takes out the previous wave's highs. Right? That would kind of be the bullish look. You know, the bearish interpretation is you've failed the T line and you've failed the 5 EMA and you closed below. So looking at this candle here, you close below the T line. And this current candle, again, it's only Tuesday. I know this is a weekly chart. But this current candle is trading well below the T line and the 5 EMA. And you can see that they show you that selling, right? Because they start to diverge on one another or converge on one another. When one crosses down through the other, that's one of the things that can trigger the sell signal. There's other things within the stochastic RSI and a few other parameters working in the background to try and filter out the false ones. So the downside is close below the T line, can't seem to trade above it for any length of time, and if you were to close below it again, you risk, this is the draw for price, the 20. If you don't hold the 20, you come back to the 50, and so on and so on and so on. And the concerning part is that, look at this gap right here. So if you fall into this, you know, if this gets much heavier, you've chatted with the 20 here before, so it's not like it's the first time it's seen it. If it does roll, this gap will make it easy to find the 50. Not all in one candle or anything, but there's not as much price here to hold it out. And that's what happens. We look onto the daily. Big gap in here. I want to show you something. What happened here? So, you know, doing a little Bart Simpson top here. Chatter, chatter, right? break, support, obviously triggers a sell, and and this candle bounces, but what does it do? It can't break the T line or the 5 EMA. So let's say, for example, you entered, somewhere in this day. That's your next daily candle. Are you panicking? Were you wrong? No. The chart told you that this was a downtrend. We don't know what comes after this red candle, but we do know that that divergence is there. And we do know that if we bounce off the 50 and we pop, that the likely place for us to go is the 20, right? Is this the first touch of the 20 since you broke it here? Yes. Price goes down. But we had a cue, right? Our chart was telling us that the probability of you being correct to the downside was stronger than the probability of it moving to the upside. Longing into resistance at the first touch, I don't care what time frame it is, chances are it's going to fail. And you were told that was likely to happen because of the divergence to the downside was still there. Now you break the 50. All of this is momentum. Look at it, it expands here. So the break of the 50 accelerated the sell-off. So now we're going sideways. We've shown this on our crypto charts too, right? So impulse down, sideways back to these levels, and what happens? Failed breakout, take out previous way as low. Now, playing at the 50. If you get support from it, well, could be a good thing, but when you break it, it's twice as bad. And what you have here is two green candles on a retrace that would get a lot of people excited, hit that buy button. But if you were, then you have to understand that it's probably short-lived. This divergence and expanding is telling you this momentum, this down is still in play and still very valid. And this looks like maybe a failed breakout where price comes back, takes out the previous wave's low. It's possible. And when we look at our volume profile, what looks more likely? I'm not afraid to say it. Down, down, like this. Something like this. That kind of thing. Would it not look any different than this chart? Boom, 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 boom. Sound effects not included. Same thing, right? Everything's fractal. What you'll see on one time frame, you'll see on another, any asset, any market. I think what you see here is what you're going to see down here. We're really just kicking off this wave. Just as an example, after two green candles, is this the candle that you were expecting or hoping for? No, you were hoping one that was going to break through this wick and this level here of the T line and possibly the tops and bottoms of this structure in here. That's what you were hoping for. You weren't hoping for this candle. That's for sure. So I think there's still more downside here. And hey, again, is it crazy to come back to the 200 MA on a daily? Is it crazy for price to come back to the point of control? No, it's expected. It's just where on the chart is that going to happen? But I don't think it's going to be up here at 404. I just don't. Let's look at Microsoft, because it's given us some real interesting looks. Like, we get some Batman ears with antennas on this weekly chart. So I have a feeling that we're kicking something off here. Oh, I didn't sell. Boom, boom. Oh, yeah, this smells like a better time to take my money. And that looks like that's happening. So we failed one level. We have a sell signal. And we have, it looks like, some pretty reasonable divergence starting to open up, which translates into momentum. And we have this big gap here that if price was to fall into it, it would find the upper value range and or the 50 MA pretty quickly. In order to get to the point of control, which price is going to want to do, you're going to have to fail the 50, and those 50 MA failures are usually indicative of bigger things. What else do you notice on the chart? You notice where the 200 is on the weekly? Right in this midst of this gap. And look at the past price that you can connect in here and in here. So you have to start to look at some of these larger plays and go, wow, you know, they've had their days in the sun. This is the Microsoft monthly. Still a very bullish chart, obviously. This is what happens when you go parabolic. You get that rainbow effect, and you come back and tag these levels. You're still holding the T line on the monthly chart at 487, 488, something like that. To come back to the 20, it's 444. But this is where the bulk of the trading is, down here. And here's your 200. So we're seeing a lot of these charts where the 200 MA or the 50 MA on a weekly chart feels like it's a million miles apart. But we know that price is drawn to these levels. And I guess the takeaway is that when there's wild things going on, like there is now, having an understanding of where price is likely to move is extremely helpful. It doesn't mean that you're not going to have some kind of heart attack in the process, but you'll understand what's going on so that you won't be surprised. You might not like it, but you won't be surprised. This is the MicroStrategy chart. This is the weekly chart. And, you know, we drew this on here a long time ago in our stream, identifying that this is an interesting area of past price. But at the time, you know, we were way up here. So the price has really kind of fallen into the zone that we expected it to fall. You get a sell. How hard is this, right? Market had to figure out what it was going to do, decided it is going to finally sell off. There's our sell signal. All this divergence opens up. You break the 20, you find the 50, you break the 50, you find the 100, you've broken the 100. I think you're looking for the 200 weekly. And this weekly candle, as of yet, hasn't really showed us much, right? Impulse down, hasn't even brought us back to the 5 EMA yet. On the daily chart, that amber line is actually the 1000 MA on the daily. Isn't that interesting? So you can kind of see how this is lining up. So we've broken the 500, you know, 20, 50, 100, 200, now the 500. There's the 1000. Does that seem unrealistic? If I told you up here that if if this downtrend was to continue, that you would eventually find a 1,000-day moving average, would you believe me? Probably not. You probably would think that this is your, your resting place on the 200. Right? But you've broken one level, you find the next. This divergence is telling us everything, right? Divergences to the downside, to the downside, to the downside. Okay, a little bit of resistance. What happens? Yeah, it is crazy. Don't think that price won't go to that place you don't think it can go to. Because it bloody hell will. What's the problem here? The simple fact is that there's not enough money coming in to push price higher. The money's going the other way. It's going south. Selling. It's going to take a lot of money and a lot of momentum to, just suddenly have a V-shaped bottom on this thing. Also rather unlikely. I think you look for this area in here that we drew, and you look to see if we tag anything in and along here, which would be the 200 MA on the weekly chart, which is not an unreasonable place for price to go. It's just it's an expected place for price to go. Walmart, another chart that's gone nowhere but up. Does that look like one big nasty gap to the... Yeah. Why is it there? It's there because we pushed price higher in a parabolic way, with velocity, with momentum. And in the process of doing that, it's like just overfilling a balloon. I'm not suggesting Walmart's a bubble or anything like that. All I'm saying is that when you blow it up like that, it expands. As opposed to, smaller increments that don't fan out your ranges. But now that they're fanned out and price has to come back and check them, it's just one at a time. So here's your weekly Walmart chart, obviously a bullish chart. You're finally starting to see a sell signal here. These two green candles really meant nothing, right? They were just green candles in what's turning out to be a downtrend. And if you don't hold the 20, you look to the 50, and so on and so on and so on. But this gap will be problematic. And you failed the 50 on the weekly and triggered a sell signal. Or sorry, the daily. This gap below, here's your 200. Your 200 sits right at the point of control on the volume profile at 97 and change. So if this was a failed breakout, so in other words, the resistance that you see here at the 20 and 50, if this is a failed breakout, you do what? You roll over and at least look for the previous wave's low, which would put you right in the middle of this gap, which is kind of unlikely that it would stay there, especially when the 200 waits for it beneath. And this chart could be anything. Could be a crypto chart. It wouldn't matter. Here's CFX. Whoops. Same, right? Let's look at our weekly chart. Are you making lower highs? Yeah. Do they look extreme? Absolutely. But it is what it is. Trading below everything. If you're in a chart like this, I don't care if it's a 5-minute chart or a weekly chart. If you're long in here, you're just not going to survive. especially if you're leveraged. You can't fight these. You just can't fight that. When that divergence is there in any direction, just like here to the upside, right? You can't you can't be shorting this chart thinking that you're going to live to tell about it, right? You have to be long. So whenever you see that this divergence as such, get on the right side of it and stay on the right side of it. But if you're on the wrong side of it, cut it quickly, because if you don't, you could be dead before you know it. So don't get stuck on the wrong side of what we're using as an indicator for a trend, because it's not going to be your friend. This is the dollar index, or DXY. Did we not box in really well with these levels? Absolutely. Right up to this 194 level. Look at this candle here that hits the 200 and then fades. We show these things every week on various different time frames of various different types of assets. Right? This level is here simply because it was an area that was support. That's all. And is it relevant even today? Yes. And that's simply because price is always going to be attracted to where has been before. This is a weekly chart for DXY, which is the US dollar index. You know, obviously right now it's a bullish chart. Certainly more bullish than it was here. But this is a really good case in point. If you're long here, the dollar, I don't think you're going to live to tell about it. So if you're on the wrong side of this, get on the right side of it. If you were short here, you're not going to live to tell about it. When you see this divergence, like you see on your charts now, you're never going to second guess that stuff again. You're going to be like, okay, I'm long, whatever XYZ, and price is doing this, I'm good. But if I'm long when price is doing this and I see this kind of divergence, there's no hope for you. You won't make it. If you're on the wrong side, even if it's like a 15-minute chart, I don't care. If you're on the wrong side, get on the right side. Because when you see the divergence like this, there's just no hope. Hey, and again, this is an example of why we use these long-term averages on shorter time frames, because everything is fractal and they frame in ranges. And that's kind of what you're seeing here. Let's look at oil real quick, because it's got a little bit of a heartbeat. Little bit. And I'm just going to take some stuff off here. The 61.66 level that we had on our charts was incredibly relevant. Like and it still is. You know, we're making another run for it here. This is shows up better on our weekly. This is our trend line that we drew here. And it's been really, really, really good as far as holding on to, giving us some context of where we are on the chart. Right? So I want to show you the weekly, because this weekly candle is starting to break above the T line. That's not a huge deal, so was this one, right? But I'm just at this point, you're starting to break above the T line, which is bullish, right? We use everything we do, we look at from a fractal perspective. And oil is one of these things that's got a tremendous amount of history. So I can look at it on the monthly chart as well and still show you that on this target that I actually believe that I have is to help